Hello everyone and welcome back into the channel. Guys, in this video I'm going to explain to you how someone could have got 182% if they have bought the MSTY, which it is an ETF, a yield max ETF, at the beginning of the insertion, which was last year on 20th of February, and collect the dividends every single month and reinvest also the dividends. In other words, just doing the normal drip, as you know, okay? As I always say to you guys in this channel, the compound, guys, it is our main, or let's say our best friend when it comes to our LTI club, our long-term investment club. Why? Because we can have the options, we can have the futures, we can trade this thing here in a short duration, let's say 30 to 45 to 6. We can collect here premium, and this premium can go back to this long-term investing. I'm talking about here the MSTY, but there's plenty of other ETFs you can do as well. This one here is a little bit more risky, as you know, due to the net asset value, but if you do your DCA in the long term, you should come ahead unless something out of this world happen, okay? But in this case, yes, someone that had put $1,000 on 20th of February 2024, and just a little bit over 1 year after, they would have got $1,800 in return, which is roughly almost 200%. But you must buy, you must do the drip, otherwise that ain't gonna happen, especially in things like this that do affect the net asset value a lot, okay? So as you guys can see, we start here at this level here, which was on 20th of February, and then we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 dividends paid so far, and the volatility, as you guys can see, very normal, okay? Because why? These ETFs pretty much, guys, do a synthetic covered call, which I'm guessing is very simple, okay? A covered call, it is when someone has 100 shares, you just sell a call option above your base cost. So what they're doing here is, to make things easy, probably they are buying here a call option, let's say a LEAP, 1 year, 2 years, whatever it is, and they selling short-term dates calls against this LEAP. And if the LEAP goes in the money, you can just manage the trade by rolling the call to a further date and with a higher strike price. The strategy itself, it is very simple, okay? Very simple. I do myself a lot, but for someone who doesn't know what it is, they just basically doing the synthetic covered call strategy, okay? Collateralized by cash and USD Treasury, things like that, which is good. It's not too bad, okay? But of course, depending on the market situation, the net asset value will suffer a lot. So basically what I did was, so you guys can have an idea, I came here, I pressed the first dividend, as you guys can see, was paid on 4th of April 2024 and was $4 and 0.129. So if you go back here to the spreadsheet, and this was the first payment, $4.129 to the small place for 1.3. We start here with $1,000. The initial price was 20.38. We got almost 50 shares, and then we got paid $34. The closing price was 34 when we did receive this dividend here. So we did receive this amount of dollars here for the amount of shares that we had, and we just bought more shares with this money here at this price here, okay? Very simple. So basically this divide by this, that give us the extra number of shares, and we're gonna add this extra number of shares to our initial number of shares, which gives this one here, and then you're gonna just cross over like this, okay? So at the very end, after 386 days, which is roughly almost 1 year, which it is on 14th of February 2025, we did receive more dividend, we bought more shares. So basically now, before the next dividend, which it is in March, we have 141 shares. The current stock price, or the current price for this ETF, it is $20.03. So if we do multiply these two here, that's the number we get, okay? This is our current portfolio balance if we were just to buy MSTY, and if, of course, if you take the initial investment here, that's how much we end up with, which is roughly $182. Very simple maths. And this is what we call napkins calculation. But of course, guys, I'm not taking consideration here some fees. You might have paid some fees when you receive these dividends. So you can do take these numbers here, you can subtract your fees as well, but you won't be that far. So probably basically you go from 182 to down, let's say 150. But even if you got 100% here after 1 year, that's amazing. Why? Because you can take your initial investment off the table, and guess what, you can play with the house money, because that's what we do with this kind of ETFs. Okay, and by the way, for those of you that want to join our Discord group, if you want to learn how to trade options, futures, things like that, we trading pretty much, guys, every single day. But when I mean trade is, I use derivatives to go long in my long-term investment, okay? Because at the end of the day, guys, we are after this thing here. We want to collect dividends, because this is what is going to get us the most of the money, okay? But if you want to join our club, our LTI, the first link on the description below, okay? And of course, we do use TastyWorks. If you use TastyWorks or IB or Thinkorswim, whatever it is, Robinhood, you can still follow our trades, all right? But very, very simple here, guys. So I'm going to show it to you. And by the way, for those of you that ask me about the option only, last year, we did very, very well. As you guys can see, we made almost $500,000 in one of our big accounts and almost $30,000 in another smaller trading account. This was just trading option, but this year we have initiate our LTI, which it is our long-term investment club. We're gonna get the dividends from here. We're gonna turn and put this thing into this thing here, and this thing here we're gonna get premium, and we're gonna put this thing into this thing here. In other words, we're making our own wheel strategy, which it is trading options and futures, getting the premium, buying long-term shares, getting dividends, reinvest here, and also helping us with our buying power when it comes to trade options. Okay, so feel free to join us any time you like. But anyway, hope you guys do understand. Very simple calculation here. There's not much secret about this one. I showed you that someone that have invested roughly, let's say, $1,000 last year, you have got almost $2,000 in return, which is roughly 182%. It is possible to continue like this forever? No. This is not feasible, okay? That's not viable. But if you do get, let's say, out of this, let's say 30% the next year, or anything like 50%, you're still beating the S&P anyway. So it's still a viable investment. But again, this is supposed to be rough, let's say 2% of your portfolio. Don't put 100% here, because this is not the type of security you use for this kind of investment. This is supposed to be a very small part of your portfolio. Anyway, all the best, stay safe, and happy investing.